Welcome to the Lazy Money Machine, where we show you the easy, no-nonsense way to financial and time freedom. Here are your hosts, Graham Brown and Erik ten Haver.
We're going to talk about commercial property in a while, and my guest is Walter Rijk. Walter is in Enschede.
Hi guys.
Enschede in the Netherlands. If you're not Dutch, you won't pronounce that city name correctly. Enschede. It's a place both Walter and I know well. We both studied there, and that's also where I know Walter from. And that's also how he got in touch with me again. So very interesting. And today's discussion, the theme of today is commercial property, and the reason for that is that in the chats and in the Facebook group, Walter indicated that he's quite active with commercial property, and I know very little about it. And therefore, I thought it would be a good reason to invite him to talk with us for an hour. So thank you for making the time, Walter.
Yeah, you're welcome.
Yeah, so a quick introduction for you. Yeah, like I said, it's an interesting relationship. I haven't spoken to you for over 25 years. And then all of a sudden, you show up in my world again, which I very much appreciate. And today maybe talk a little bit about your life for the last 20 years. I would say, what have you been up to, and what are you doing now?
Yeah. 20 years ago, I started my own company together with my business partner, and it was in systems management, so IT, computers, installing servers, all the stuff. And that expanded for over the last 20 years, and it grew quite big. We now have 230 employees, so that's quite a lot. And besides systems management, the major part of our company is smartphone software. That's what we make. For parking offenses, when you park your car in a place where you're not allowed or you don't pay for it, and they can write a ticket with our software. Field service applications for companies like Carglass, so they know what they have to do, what hours they have made, what materials they have used. For security companies, security guards that are patrolling business parks and stuff like that, and guarding offices. And the latest thing we do is Internet of Things. It's a very trendy thing, so everybody likes that.
What is it that you do exactly for that? What application do you have for Internet of Things?
For the Dutch railways, we're monitoring the switches of the railways, so the Dutch railways know whether a switch is broken or not, or if it's gonna break or not. Okay. In order to have more security and more reliability in the railroad.
Okay. Very well. So, and what's the name of the company?
Sigmax.
Sigmax. Okay.
Yeah.
And how long has that company been in operation, Walter?
In the 1st of March is 20 years.
Whoa! Congratulations.
Yeah. Yeah, thanks. So this is a year of festivities for us.
Yeah, I can imagine.
So our logo has changed this year with a 20 beside it and stuff like that.
It's a milestone.
Really. Yeah.
You're in the top less than 1% of companies that survives this long, I think, according to statistics.
5 years is a critical point. If you make it after 5 years, you're going to make it longer than that.
Yeah.
And we're still growing rapidly, at least 15% every year.
Wow.
Yeah.
That's fantastic.
But that's also the reason why I'm in this group.
Okay, tell me, why was that?
Well, it's gotten quite big, and it's a lot of stress and the burden of all the responsibilities, and it's not good for my health. I don't like it anymore. So I wanted something else, and I was thinking about it, and I saw a message from you in LinkedIn. Yeah. And I thought, well, let's look up this lazy money machine thing. Yeah. And it inspired me to go on. And I already taken the decision to leave my company. Mm-hmm. But since nobody around me did such kind of thing, it's very hard to do. So it's good to have other people that have done sort of the same thing.
Right.
So it helped me really in making my mind up and thinking, well, I'm not crazy. I can do something else besides working very hard and 9 to 5 and stuff like that.
Yeah, I find that not only in the conversation I had with you already, but also with a lot of other people. If you're on an achiever career path, or you're on an entrepreneurial cycle where things are going well and you're growing, it's sometimes hard to then admit to your surroundings, well, maybe I want to do something different. So how did your surroundings react to your decision or your message?
The first one I talked to was, of course, my business partner, and he didn't really like that, of course, but he understood my decision, and it's not something that I decided from one day to the other. It's something that grows, and in the years when we started out, I never thought we would achieve a company with 100 people, but it's even way more than that.
Yeah.
So I've checked a lot of boxes. I did 100 plus employees. I had the big office we built and all the stuff like that. So I achieved a lot of things I wanted when I was younger. Mm-hmm. And there's now no need for me to have anything more than that. I need other things. I like to create things in life. Yeah. That can be creating a company, but now it's so big, it's not creating them anymore, it's just managing.
Yeah.
And, well, I'm losing my interest in it.
Yeah. Yeah.
So then for me, I thought, well, then it's time to do something else.
Yeah.
I don't know what yet, but
so
I have time to decide.
Okay, so this year is, I understood from you, this year is the year where you're going to look for, that next passion or that next activity.
Yeah. I'm working until the 1st of April, then I'm leaving.
Yeah.
And then 3 months of traveling South America. And after that, well, we'll see.
Yeah. Yeah. Very brave decision. We admire those decisions of people doing that. And
it was a very hard one.
It was a very hard one, yeah.
Yeah. It took quite some time to take the decision, and but in the end, I'm happy with it. It's always a double. I'm glad to be going on to something else, and I'm sad to leave all the nice stuff within the company and all my colleagues and the nice projects I'm doing. And so I'm gonna miss stuff, and there's stuff that I'm absolutely not gonna miss.
Okay. So your year is going to be a year of exploration. Are you're still a shareholder in the company, so you'll continue to receive dividends from the company or the results from the company, or are you going to be involved like as a commissioner or as in any way?
Yeah.
Or?
Yeah, something like that. Yeah, and I'm not going to receive a lot of dividends from the company because of the high growth that costs a lot of money. So most of the profit is reinvested in the company.
I see. Okay.
So I'm living off the property.
Right.
That's a separate business.
Right. Graham just did a comment on our Facebook Live. He said, interesting insight. Success can sometimes trap us. Yeah, that's true.
Yeah, absolutely. Yeah. And it's hard to escape it because for the outside world, you're very successful and everybody is saying you're doing well, and so there's no need to escape that, and everybody is confirming that you're doing the right thing. But in your mind, in the end, you don't feel like it's the right thing. Yeah.
And if it feels wrong inside, in my personal experience, it's usually only a matter of time before you need to make a change to live up to that. Because I mean, you can't be happy if if there's something burning inside that wants to do something different, I think.
Yeah, and then you go to the office and think, well, another day of the same things, and that's not healthy in the end.
No, I've had those days. I mean, especially in the phase after I lost my business in 2011, I ran a lot of different startups, and well, to be very frank, I mean, not many of those were very successful. And then there came a point where I also decided, well, this I don't think is the life that I want. Running these companies, trying to restart a business, and then also I decided to go and I'm going to stop that life and start building something new. So very interesting. So, let's move the topic a little bit to the commercial property, and we might come back to some more philosophical issues later on, maybe once we go through this.
Yeah.
Tell me about how you got into a property investor, because you started off with a technical IT company.
Yeah.
Why at some point you must have decided, okay, it might be good to also be involved in property. What happened, and how come you got involved with that?
Yeah. We were renting an office, and the owner of that office building wanted to retire himself. He wanted to go to Portugal.
Right.
And he offered us, well, wouldn't you be interested in buying the property?
Yep.
But we thought about it, and we didn't have an idea that we needed the property or whatever. But we're always into adventure, so we thought, well, why not?
Right.
Let's try it. We need some sort of pension, so just do it.
Right.
And it took quite a lot of time before we bought it, because we weren't a rich company by then, and the money was low, so it was very difficult to achieve that. But with some creativity, we managed to buy it in the end.
Okay. Are you happy to talk a little bit about the creativity? Because that some people are, when we're talking about creativity in property, it's something very different from being financially creative or tax creative. So maybe you talk about that. It's not that if you're creative, sometimes it's being perceived as being illegal, but that's not really what it is about. So maybe you can tell me a little bit about what that creativity entailed when you were buying your office.
Yeah.
In the meantime, I'll show the pictures of the office so people can see it. So just continue.
Yeah. That's the small office, the normal with bricks. We went to the banks, of course, to talk about the mortgage, and they wanted to give us a certain amount of money. That's always usual in property, of course, and commercial property the same. It's about 80 to 90% of the liquidation value that they will lend you.
Right.
And that wasn't enough. It was a 850,000 euro building, and we only had 50,000 euros. So that's way too low what we had on our own.
Right.
And so it went on for a year or so, and nothing happened. And in the end, I don't know who came up with the idea. But the owner of the building said, well, maybe I can lend you some money. So his son would continue his business.
Okay.
So he would be a tenant of us then. And that company, his father, paid us 5 years rent in advance.
Okay.
And so that way we just had enough money to buy the building. So that started it off. And then, of course, the first few years, we didn't get any money out of it, because we are so heavy on payback from the loans. The bank wanted the first 5 years, a lot of money being paid back. The owner, the rent was already paid, so we were short on cash every month or every year. But after a few years, after 5, 6 years, that was gone, and then it started to become profitable.
Okay. Was it? Yeah, go for it.
It was really profitable in the end, without hardly any money buying such a building.
Mm-hmm.
And at this moment, having a good cash flow on it.
Yeah. Did it make a big difference that you were the tenant of the building?
Yeah, that's always in commercial buildings. You get a higher loan from the banks when you're your own tenant.
Okay.
If it's purely for investing, the banks won't lend you as much money.
And is that only in the Netherlands in your experience, or is that?
I don't know. I have no experience international property investment, but I think so. I think it's a general rule. Banks want to decrease their risk, and if the investors are more risk than a tenant, and they know the tenant, we were banking with the same bank, and they know us, and they knew how our property of our business was going, and you have some extra assets that you can use for instance, your inventory and your debtors.
Okay.
That you can also use for collateral.
Okay. And that's also what you did. That was also the arrangement with the bank that you had, that you used that as well as a how do you call it? As a security to the loan.
Yeah.
Okay.
But we weren't a big company then, so they still didn't want to lend us a lot of money. But if we were only investors, then it would be even less.
Okay.
But we were a young company. We existed by then when we had the talks, 6 years with 25 employees. Not a lot of profit yet that came out of it. So for the banks, we were new.
Right.
They were very shy about big sums of money.
Okay. And how long did you? How long were you in this building before you decided to venture on the bigger project that you've done? How long was this?
Well, this building, the first building we bought in 2005.
Okay.
And the second building we started thinking about it in 2009.
Okay.
It's the second building we built ourselves. Well, not physically, of course, but
what triggered that decision though to look at another project?
We were growing then. We were renting space in another office already, and we estimated that we were growing and growing, and so we would run out of office space within a few years. And then we went looking for property to rent.
Okay.
But it was difficult to find a good property in our area, which we liked. There were a lot of empty buildings, but they have not enough parking space. They weren't very pretty, weren't at a good location. And so in the end we thought, well, why not build it ourselves?
Okay.
And then we started investigating, well, where could we build and where's a plot of land. And we were lucky to have the city free up some space for us. They were reserving a plot of land for big companies, but those big companies were never going to come, so they eventually gave that plot of land to us, and it's one of the best plots of land in the city.
The municipality, the government gave it to you, or did you?
No, we had to buy it. So.
Okay, well that would have been good.
Yeah, no, there were no discounts. It's very hard on a city will never give discounts.
Okay.
That's the way cities work, because it's government. They cannot negotiate much.
Yeah. So you were able to secure that, and you thought it's a good location. And then, how did you decide how did you come up with your vision for this building?
Well, we started out with a completely different vision than what we ended up with.
Okay.
We thought, well, just a normal building, nothing too fancy, just not expensive, just some brickwork, and that's it. Yeah. But then we hired an architect, and then we started talking, and he started showing us some examples, and we said, well, no, that's not what we want. And in the end, it evolved, and in the end, we came up with the current design. Okay.
Well, before we go on, let me show that design. I've shared a picture already in the group, but I'll take everybody through the photos. As you can see, this is the front of the building with the Sigmax logo on the top. Tell us a bit about the building. It's very, very special, right? It's all glass. It has, it seems like sort of terraces between the glass floors. Tell us a bit about it, and I'll take people through the photos.
Okay, yeah, you were. The sound was gone for a minute, but
yeah, you're back now. It's fine.
Yeah, and the design process took about a year. So we started that in 2010, and then the building itself took 1 year, and so we finished it on the 1st of January 2012.
Okay.
So we're now 6 years in this building.
Okay.
And it's already too small again, so I'm not in my own building at this moment. I'm in a rented office at the neighbor's office.
Okay. So is this whole building used for Sigmax?
Yeah. We still use our own the old building, the first building.
Yeah.
And we have a third building right besides the main building.
Okay. So basically, you're the owner of the building, but you're also the only tenant.
Yeah, and the main building, yes, and the small building, 50% is rented out to a tenant.
Okay.
Yeah.
Yeah, I'm taking people through pictures. It looks like you beat Steve Jobs to the design. It's not a circle, but it's definitely bent glass on the edges, and
yeah, it's a lot. It's a style that's becoming more common now, and it's inspired also in a building in Barcelona from Mies van der Rohe, the Barcelona Pavilion.
Okay.
And it's you see it indeed in Apple building and other buildings. It's coming more and more.
Yeah. Yeah.
And it's also a very green building. This is something which is important in office space. You have to have a green building. Otherwise, people may rent other offices.
Green as in energy efficient? Is that?
Yeah.
Okay.
Yeah.
And why is that important?
Well, everywhere in the world, not everywhere, but a lot of spaces, there's too much office space. So there's always more office space than there's demand for it. The supply is higher. So you have to compete for the tenants.
Okay.
And the tenants want the best buildings. So it can be a higher risk, I think, in offices because there's a lot of vacancies. But if you have the right building, the risk is very low.
Okay.
So there's a lot of factors that provide a good building. It can be enough parking space, an easy accessible location.
As you can hear, I lost the connection with Walter here. I'll try to call him back as soon as I can. We'll put him back on. Just a second. Okay. Yeah, I lost you for a second, but you're back. So.
Yeah. I was saying you need good properties of your property.
Yeah.
There's a parking space, prominent location, but also energy efficient.
Okay.
And there are laws now that by 2023 you need to have a very energy efficient building, otherwise you cannot even use the building. You're not allowed to have tenants in it.
Okay. So this building lives up to those standards already, yeah? That's what you're saying?
Yeah.
Okay. Tell me a little bit about how you finance this, because it seems like a huge project. So you have your existing building where your business is running, and then you're taking on this new project. You know, it must cost multi-million-dollar building. I think it looks like it's really big. So how did you manage to finance this?
The banks for commercial property. We only use banks. Nobody uses mortgage brokers.
Oh yeah, okay.
You go directly to a bank.
Okay.
And we asked the banks whether they would lend us the money, and we always ask more than one bank, so that they compete with each other. You get the lowest interest rate possible.
Right.
And it's a long negotiation process.
How long?
Because months, I think, maybe 4 or 5 months, I think, before you.
Oh, wow.
Yeah. And it can be sped up or if you need it, but the banks always want the least amount of risk, and the highest interest, and they want everything, and so we want the same, but the opposite of what the banks want. So it's all negotiable.
Yeah.
For your own house, when you have a mortgage, nothing is negotiable, almost nothing. But in commercial property, the loans, everything is negotiable. Every term the amount, the interest.
Yeah.
It's all custom-made loans.
Yeah. And you also mentioned something that that you learned in this process, that the perspective of the bank is actually also they need to place funds, right? So it's not like we're the ones asking for money and we're hoping we're getting it. The bank itself also has a challenge to place their funds, right?
Yeah, that's when we started out. We thought, well, can we get the money? And they have the money. We want something they have.
Yeah,
and that's how you tend to look to it. But when you look at it from the other side, it's for the bank. It's just a business. An account manager has a target for that year, and he has to sell so much loans.
Mm-hmm.
So they need to get rid of their money. And then you really notice that when you ask more than one bank and you tell them that they what the other bank is that you're asking also, and then they start bidding up against each other.
Okay.
And it also makes it the more you want a loan, the easier it is, because the account manager has a target for so much million in a year. He has to to lend some to other people. And if he can lend 1 million at a time, that's much easier than 5 times 200K.
Right.
So they're very much interested in larger deals above 1 million.
Yeah.
And for a bank, 1 million is nothing. It's a funny story from the beginning when we started out. We were only 3 years in business, and we had to sell PDAs to a governmental organization. And it was 750k euros.
PDAs are for people that don't remember. PDAs are basically iPhones without a phone, right?
Smartphones without a phone part.
Oh shit, we're old enough to remember this. Oh my.
Yeah. And the government, we had to deliver it in January, but the government needed to get rid of his money in December. So we had 750k for 1 month. Uh-huh. And we thought, well, let's go to the bank and see if we can get some interest on that. Yeah. So I called the bank and they said, well, yeah, I'm sorry, sir, but 750k is not much. If you had more than 1 million, then we could arrange something, but this is not enough. So it was really disappointing at that time, but that's how the money works for the banks. And the more money, the easier it is. The small loans are difficult, and they don't want to chase the small loans. They want the big loans.
Yeah. Same amount of work, same amount of due diligence, but for a higher placement for the bank, right?
Yeah.
There's something else that you mentioned in your notes that you made for this call, which is that there's also a big difference between residential and commercial, in the sense that I have in my property in the UK, I've got 42 tenants with a turnover of maybe 1 or 2 every month. How does that work in commercial property?
Well, of course, depends on the size of the building, but normally a tenant takes a lot of space. So in a 2,000 square meter building, most of the times you have maybe 2 or 3 tenants, maybe 1 tenant. Okay. So that's also easier on yourself, because you only have to deal with a few tenants. Yeah. And the contracts are very long. In the days of the financial crisis, the contracts might be 1 or 2 or 3 years. But in good times, the contracts will be 5, 7 or 10 years. And times are getting better, so the contracts are getting longer and longer again. Yeah.
Just as a note to people watching, if you got any questions for Walter, please drop them in the comments in the Facebook Live. I'll be able to pull them on the screen, and we can answer the questions you have. There's one other big difference. Actually, almost everything in commercial and residential, the way I do my business and you do your business, is very different. So there's also something in commercial whereby you basically provide basic floor space and cooling and heating, I think, and the tenant needs to completely fit out their space. Yeah.
That's normal in business. You buy or you rent a building that's completely empty with concrete floors, no dividing walls, no computer networks. The tenant has to arrange everything himself. Yeah. So that's very easy on investors, because you exactly know what the building is costing you. You have the building and you have the interest. And you're not dealing with dividing walls or carpets and stuff like that. It's very easy on calculating the write-off of the building and the cost.
Okay. And what about the risk of collection? That's one of my big risks, of course. I've got 42 tenants who need to pay me every month. Okay, I hold a 1 month deposit, so if something goes wrong, I've got 1 month buffer. But then again, I've got 42, so my risk is only, it's spread over many, many tenants. But if there's a company that rents one of your buildings and they have financial problems, you might be in trouble as well.
Yeah, in that way the risk can be higher.
Okay.
You have normally a 3-month deposit, so that's a bit more.
Okay.
But if you lose a tenant, it might be hard to get a new one. It may take a while.
Is there a process of getting a tenant out of a building if this happens, if they're in arrears?
I don't know.
Okay.
No knowledge about that, but I think so, yes.
Yeah. Plus, it's fitted out, right? So if he's leaving the building is not suitable for the next tenant immediately, right? Because there's all sorts of fit out in the building as well.
Yeah.
Okay.
But sometimes people don't care about that, so.
I mean, they would take what is there. You mean, or?
Yeah.
Oh, okay. Yeah, I remember. Yeah, we've done that too.
That provides extra value for you as an investor because it's there and you didn't pay for it.
Yeah. As a matter of fact, I've done that many times here in Jakarta. I've had many different offices, and only the 2 times I think we fitted out ourselves, and all the other times we rented something that was fitted out more or less to what we wanted. Because when you go into this space as a company, you think, I need to have my financial area there, reception area there, but in the end, once somebody has fitted it out, the cost you save for just moving in with a fitted out office is enormous.
Yeah, it's very, very expensive.
Fitting out is very expensive, yeah.
I can give you some numbers.
Okay.
For the glass building, it's the fitting, the interior is 0.7 million.
Wow.
So it's enormous.
Yeah. For how many square meters?
2,500.
Okay. Yeah, that's a lot of money. Yeah. It looks fantastic too, obviously, but.
Yeah, thanks.
Yeah.
I can give you some more numbers on the building. It's
if you're happy to share, go ahead.
Yeah, no problem. It's public information, by the way. In the Netherlands, you can see what mortgages are there and how much a building costs. So, the building itself was 4.4 million euros. And the interior was 0.7, so the total of 5.1 million.
Okay.
And we got a bank loan for 4.4 million.
Okay.
And we had our own money was 0.4 million, so 400k or euros. And the tenants, which was ourselves, also paid 300k for the interior.
Okay.
So it's a bit of complex construction.
Yeah.
So we had for the building itself almost 90% financed by the banks. So that's a very high percentage. It's very hard to get such a percentage. But since we're a big company in the town where we live, they all wanted to lend us money.
Right.
We were really eager to do that.
Okay.
Even when the financial crisis was very big at this moment.
Yeah. Okay. And but currently you're the tenant of the building, and you have a tenant in the other building. Do you have any plans to move your company out of this glass building and just have it purely as a rented building, or not?
No, because the building is such a remarkable building in this area. We will never leave that. It's bringing us a lot of attention.
Okay.
And even last night we were on the local news. We were on the newspaper, a Dutch newspaper. So the building really helps.
Yeah, it's very good. Let's. Graham is not. It's a bit big, but let me see if I make it a bit smaller and then move it here. Graham is not in the call at the moment, but he has a few questions, so maybe we can address those. So Graham is saying I'm curious to know about more comparisons, residential versus commercial. Are there many individual commercial landlords like Walter? My experience is mostly corporates. Okay, and then another question is, any comparisons on the type of people who succeed in commercial property? Commercial landlords usually are a lot sharper. That's being diplomatic. So meaning, I guess meaning, commercial, if you're a commercial landlord, you're more higher up the chain. The projects are more bigger, more difficult, right?
Yeah, of course. Commercial property, the numbers are bigger, the buildings are bigger, so you need more money.
Right.
And the people that have more money are previous entrepreneurs or investment companies. That's the two types of investors you see.
Right.
So a lot of entrepreneurs that did well, that buy a few buildings, and then the large property investment corporations that have tons of properties.
Okay. So people like you that own a few buildings, are there many of those?
Yeah, quite a lot. Yeah. Well, not too many, but I think maybe 1/3 of all the buildings here might be of people like me.
Oh, okay. So that is quite a lot, eh?
Yeah.
And do they talk to each other? Do you guys talk to each other? Do you meet each other? Or?
No, not a lot. No. There's no corporation for it or whatever. No, we don't. Okay. But we know who's owning what building. When you speak to the estate agents, they know who's owning what building and if they have a problem or not. And the last years were very bad for some people.
Okay.
A lot of people went in with very high leverage and in the financial crisis. And when they didn't have the right property, they have a lot of vacancy and then they start getting into trouble.
Okay.
So in the last, I think 6 months, I've seen 2 big guys going bankrupt. Guys like I was, and that gained even more property.
Yeah.
And they went bottom up.
Okay, so is that also something you take into consideration about the scale that you want to bring this to, or not? Do you have any plans to add more to the portfolio?
Yeah, I want to add some more, but it's not about the scale, it's about the risk you're taking. So in the beginning we had an enormous leverage, and that's also very risky.
Yeah.
But since we were our own tenant, we believe in our own company, so it's an all or nothing game. If the company goes wrong, the property goes wrong also, but we hope to do well, so we take the risk for ourselves. But if you have other tenants, then the risk is very high when you have a very high leverage.
Yeah.
And also the banks play a role in that, because the valuation of the property is done by estate agents, and that may differ very much depending on the times.
Yeah.
The banks look at those valuations with the renewal of the mortgages. Yeah. So that's when you start getting into trouble, when you have to renew your mortgage. And maybe you have enough money to pay your mortgage, but if the bank says, well, your mortgage is higher than the valuation, you have to pay us back. And then you start getting into trouble.
Yeah. So then would the bank be able to do a margin call and say, look, you need to fill up the difference first before we accept your loan again?
Yeah.
Okay. Yeah, that's quite tricky.
And you cannot do it. And sometimes they even calculate on you not being able to do that. And then you come in a special department of the bank, and then they have full control of your property.
Yeah.
All the rent goes to the bank, and then you're screwed basically.
To be very honest, it's not much different with commercial property the way that we do it in the UK, to be honest, because we are we're not that highly leveraged, but especially also in residential. Even though I would say that residential is more stable, because the demand for residential is mainly depending on how much capacity is being built and the growth of the population. And in the UK, we have the situation that there's still a lot of shortage. However, for commercial, the demand is fluctuating with the economy, right? So if the economy is doing well, and lots of people are employed in companies, then also there's a lot of need for commercial property. So, but even with our situation of relatively stable demand, valuation is still an issue there too. And normally, if you do residential property, the valuations, if you do simple residential properties, it might be a valuation of the brick and mortar and the land. So if you own landed houses, as they call it, right? So houses that are on the ground, a bank could value that at what is the market value of this house. What would we be able to sell it for? But the kinds of things that we're doing where we're renting it out, then the bank also looks at what's the rental income and what's the multiple on the rental income. How does that work with commercial?
There's a difference. The value of commercial property is almost solely depends on the rent you get. The commercial value is about 10 to 12 times the rent.
Okay.
And the 10 to 12 times is over here in the area where we are. In Amsterdam, it might be a bit higher, so you might get 15 times.
Okay.
So the return on investment on properties in other cities might differ a bit.
Yeah.
But the valuation of the real estate agents does not take in account the rent you have.
Okay.
They look at it when selling it empty.
Okay.
So that value is very low.
Right.
So in our building, the first valuation was 5.2 million. And those were times when we could, we paid the real estate agent to give that valuation. And the one who pays determines the value. That was 10 years ago. But nowadays it's not possible anymore. So they look into the liquidation value. And now it's valuated at 3.5 million. So that's an enormous devaluation.
Yeah. Yeah.
Not in commercial value. The commercial value is still about the same, but the valuation is what the banks used. And a year ago we had to renew our loan, and then that valuation was used. But we paid off a lot of money because we are so highly leveraged. All the rent we put in paying off the loans. We didn't take out any money. It was all going back in the loans.
Yeah, so that you create a lot of safety with that, right? So if you pay off, if you reduce your leverage on the loan, then you're much more resistant to fluctuations in valuation, right? Because for it to drop below the value that you're borrowing is going to be, it's going to take a long time. Yeah. Tom.
We're aiming at.
Yeah, go for it.
We're aiming at about. Sorry.
No, go for it, Walter.
We're aiming at about 40% loans in the property.
Okay.
And that's a percentage that the big investment funds also use.
Okay, that's very low. So basically, you end up only borrowing 40% of the value. Is that what you're saying?
Yeah. Yeah.
Oh, that's very low. Okay. Tom Sutherland, who's been a member in our group for a long time, has a long question. So I'll drop it on the screen and then we'll take them one by one. I think he has a lot of interesting questions. So,
okay.
it's, there we have Tom with his, I think it's a bass I think it's a bass. So Tom is a musician and, he has, I'll read the questions and then I'll take you through them one by one. So, hi guys, how long was the mortgage for the first property? How long was the mortgage for the second property? And are you involved in a third property? So maybe we take that one first and then we go to the next question he has.
Yeah. The first property, the mortgage was about, you have a mortgage for 20 years, but you could fix the rent for, say 5 years.
Okay.
So normally we do that, but in the first property, the banks wanted to sell us interest rate swaps. It's a very, very devious product over there. Mm-hmm. But we didn't fall for that because we didn't understand it fully how it worked. And there were some catches and small printing. So we didn't take that. And we ended up with flexible interest rates based on Euribor.
Okay.
Which ended up very well because the Euribor was only getting lower and lower.
Okay.
And the second property, the first loan was 5 years.
Yeah, that's quite short.
And it was not. But that's normal in commercial, I think. And and you have to renew it every year. So that's always a risky moment when you renew it, because they can change it, change the conditions.
Okay. And then obviously you're not yet considering a third, right? But
no, not in the near future. Maybe next year. Yeah.
Yeah, maybe it's good for the picture of Tom, because the next one you would buy would not be with your company as a tenant, right? What would be sort of the terms you think you would be able to get if you do that?
What do you mean on the terms? For the banks.
Loans. From the bank. So let's say you would buy another building. Let's say it's $1 million. How much would you be able to borrow, and how much would you be able to have to bring yourself, you think?
Yeah, it depends on a lot of factors. The banks always look at who they have in front of them. Is it an experienced entrepreneur, an experienced investor? What kind of building is it? Are there already tenants in it? So it might be somewhere between 60 and 70% of the value that you could get a loan.
Okay, so let me put Tom back on the screen. There we go. His next question is, would you have gotten involved in commercial real estate if it wasn't for your own company?
Well, I don't know. Maybe not. It would be a much bigger step, much riskier.
Yeah.
And now that I'm in it, I have no problem taking more risk in it.
Yeah, understand that. Then his next question is, what planning did you have to do for worst case scenario for the bank loan? So how long could the building be vacant before you would get into serious trouble?
Well, with the second building, we couldn't afford any vacancy.
Okay.
There was no bad or no good scenario.
Okay.
Of course, we had some cash in the operating company, which we could use eventually if it was necessary.
Yeah.
But since we were our own tenant, there was not much risk. But since we were so high leveraged, well, you need every euro paying back the banks, and you cannot miss even €1.
Was that stressful for you?
Yeah, the building process was stressful because we were aiming at 4.8 million total building cost. And as you probably know, you could always have some overshoot in that, and 15% more in building cost is not very uncommon.
Yeah.
And in the end, we ended up with about 7% more costs. And so that's stressful because 7% from 5 million is still a lot of money.
It's a lot of money.
Yeah. So that's stressful. And the enormous amount of things you have to deal with, decisions you have to take. So it's quite a stressful process, building such a big building. Yeah.
Yeah. It's, maybe I can share a little bit about how I look at that. I mean, when I got started in the UK in property, we had a similar situation. We also have worst case scenario. Worst case scenario for us would be that we would have very little tenants, high voids, and in the end, the way I looked at it is the chances of disaster striking me in the UK is relatively small, the way I see it. But obviously I might get into a situation whereby, the company might be low on cash flow to pay the loans. But we've always geared it in such a way that, I mean, even if I think we've done the analysis, but even if we would have like 40% voids, we would still be able to keep running. Which is, not a big problem because 40% voids is very high. So, I mean, I can understand Tom's question, but it's also a little bit, sometimes you need to realize worst case, but you also need to look at it. Okay, how likely is it that that's actually going to happen? So, moving on, let's see, that was worst case scenario. His last question, and it pops up a bit big, but please tell us more about your company startup, founders, capital, clients, trends, and opportunities. So we go back a bit to the beginning when you started the business. Yeah. What was the startup setting? Did you have founders? How did you have your first clients?
Because of our 20-year anniversary, I looked it up, what was our starting capital, and I found a spreadsheet from 20 years ago.
Okay.
And I made a calculation how much cash we needed.
Right.
And it was 10,000 Dutch guilders, so that's less than 5,000 euros.
Okay.
So that's what we started with. So we didn't have any investors involved. It's just our own money.
Okay.
But I knew at the time when we started off with a limited, and in the Netherlands for a limited you have to have 18,000 euro at this moment by then.
Yeah.
And we didn't have that money. But I had a car, so I even had to let my car be evaluated as some collateral that I could use for founding the limited. So we were that short on cash at that time.
Okay.
But year over year, we've always grown on our own money. We don't have any bank loans or investors in our operating company. The only loans we have is in the property company.
Okay.
We were very conservative on financing our own company.
Okay. With specific thought behind it or not?
We don't like banks. They can, if you're in a bad situation for just a moment, they might screw you over. You have no control anymore. So we like to avoid banks as much as possible.
Okay.
And it's our experience also that they might want to screw you over, even if they are very polite guys in suit and tie, but they do things that they're not very nice, not ethical. And you have in the Netherlands at this moment a lot of problems with the interest rate swaps that the banks were trying to sell all the smaller companies.
Okay.
And the banks now have to pay for that, and there are people getting into jail for that and stuff like that. So it's and.
I mean, that might also be a little bit of the answer to Tom, right? I mean, you're trying to reduce your risk by trying to limit also the exposure to capital from banks, right? To loans from banks.
Yeah.
Yeah. And a loan in a property company is a different story, right? Because there's always the building underneath it, right? But a loan to an operating company, there might be a lot more trickiness there because you have usually very little assets. What I wanted to ask you to close off is basically what are your plans after this? So now you have all this time to think and contemplate on what to do next. Yeah. What is next for you?
Yeah, I don't know. I don't know yet. I'm currently still in the office and working, so that's not the best environment to think about something completely different.
Right.
So after I leave by the 1st of April, I start thinking about what I want to do. Okay. I'm into woodworking as a hobby, so maybe I do a bit of that. Maybe do something in Southeast Asia. It's an area I very much like. Yeah. Maybe help some startups or whatever. I don't know yet.
Yeah. Yeah, I mean, also talk around. Graham has a lot of experience with coaching and helping startups. He's been in that business for a while over the last couple of years. And I mean, also to explore that, reach out to the people that are here. We're all with different ideas, and who knows. I think from my point of view, I'd like to thank you for the hour that you made to talk to me and to talk to the group. I realize, we're only 10, 11, 12 people in the group at the moment, but we want to keep this interaction. We want to start this interaction. And when we're building the community over this year with advertising and getting more people on board, I think it will be more and more valuable. And the good thing about this is it's going to be recorded, so we can always refer back to it and direct people to people that have specific questions about commercial property. So I think from me and hopefully from Graham. Graham said it's I'll put his last comment. It's a good session, by the way. Okay, thank you, Graham. Thank you very much for your time, and we hope to speak to you soon.
You've been listening to The Lazy Money Machine. Find out more at lazymoneymachine.com.